You've got the hedge fund type investors, which goes without saying they are far more aggressive in the way they trade the market. They're happy to try and catch a 5, 10, 15 basis point move. And then you've got the more longer term value investors, as you said, that are happy to buy bonds, keep those bonds for a lengthy period of time. Often you see this in the corporate bond market, where investors will come through and they've got the buy to hold philosophy. So they'll buy and hold these bonds to maturity and lock them up against annuities or any other type of liability type flows. Politics have been a hot talking point of late. We've actually just recently done an offshore investor roadshow, and Marikana was a very big talking point for the investors. But surprisingly, they didn't put as much emphasis on it as we thought they might have. There wasn't the aggressive selling when those strikes and when the violence broke out as we anticipated. And I think the reason for it is because a lot of the offshore investors had been involved in South Africa in the past, and with our upheavals, etc. Look, this is obviously a far more tragic experience than we have seen in the past, but it almost goes hand in hand with, I'd say, with investing in South Africa. You're going to look at some key factors. Inflation obviously is critical in investing in the bond market. You're also going to look at your interest rate expectations, what the Reserve Bank is going to be doing going forward. Do we anticipate another rate cut? Do we anticipate another 3 or 4 more rate cuts? And I think the investors will then position themselves accordingly. As mentioned, the offshore investors do tend to look at us as more macro. We tend to form part of their investment strategy in emerging markets, where they look at us relative to Brazil and Mexico, etc. And the local investors will pay far more attention to your twin deficits. So internally, I think the local investors tend to be far more internally focused than the offshore investors, although you have seen a big shift in that over the last 18 months to 2 years. Large portion of the flows are still driven by street and faster money type accounts. So yesterday, for example, we had a 13, 14, 15 basis point move in the 157s. So you do get pockets of illiquidity where the market can move in small trades as 5 to 25 million rands worth of bonds being traded. So there definitely are opportunities in that type of environment, obviously provided you position the right way for those moves.